exports saw an expansion last month, growing by about 12% and earning players about $104 million US. Now, if you to compare the same performance last year in July, the earnings were about $90 million US. Now, if you look at that, it's fairly good performance, and this has been attributed to good yields in southwestern Uganda, especially for Robusta coffee. It is Money and Markets. I'm Charles Boyd, your host. Welcome. Uganda has for long struggled with an unfavorable balance of trade position. Now, one way of dealing with this problem is to increase the amount of exports out of the country. And that's why today Uganda and South Africa are trying to come together for the Uganda-South Africa Trade and Investment Summit. Now, in this segment, we pick the mind of one of the players who has actually played a role in helping Ugandan companies participate in manufacturing and value addition, which are key in driving the export agenda.
I think what is key to note is that as an institution and as a bank, what we try to do, not what we try to do or what we do, is drive what we call a sector-led strategy. So pivotal to that is identifying key sectors of the economy, identifying who the key players are in those particular sectors. So for manufacturing, obviously if you look at the overall landscape and shape of the Ugandan economy, one of the things that you will note is that industry accounts for like 26% of GDP. And if you bring it home, say to manufacturing as an overall contributor to the economy, it's close to 20%, right? So what therefore that tells you is that there's a great opportunity in the manufacturing sector. So as a bank, what we have done is we've segmented the market into industries, into sectors, into customers. And what we have realized is that when you look at the manufacturing sector, it provides a great opportunity to stimulate growth, of course, from the industry perspective and also from an economic perspective. So as Absa Bank, that's a critical area that we do support with various products that we identify as relevant to drive growth in the manufacturing sector. So I think critical for us in terms of supporting the sector, obviously, is coming up with products that meet the needs of clients. You've rightly said they need CapEx requirement, they need working capital requirements. So from an Absa perspective, what has been critical for us is to bring skill sets that understand the various sectors and the needs of our clients. So we've tailored products that are relevant. Say, for instance, if you have working capital requirements, we've got a suite or spectrum of products that would look at to say, based on your needs, our assessment of your ability to repay, our assessment of your business case, what are the relevant products that are, necessary to facilitate your working capital? So from a bank perspective, we are able to sit with our customers in these particular sectors. If it is a CapEx requirement, we will need to understand what exactly is a CapEx requirement for. Is it to expand production? Is it to improve the quality of your products? And does this infusion of this particular capital to you then necessitate or provide a base for you to be able to generate sufficient cash flows to expand your business and, of course, most importantly, service your obligations? So what we've done really is ensure that we have products that are suitable to financing working capital and also capital expenditure. So that is the manner in which we support growth of this particular sector. So I think the starting point in addressing that particular question is to say, when we look at the trade, say, imbalance or trade opportunities between South Africa and Uganda, obviously we are in a net importing position. And that simply means that on average, on an annual basis, I think the last statistics I looked at, we trade, we export about 60 billion worth of goods annually to South Africa and import in excess of 500 billion. So obviously that tells you that there is an imbalance which is tilted in favor of South Africa. So what this does do is present an opportunity for us to bridge that gap. How do we bridge the trading deficit between ourselves and South Africa? And I do believe that therefore says that as we look to expand the manufacturing sector and tying that into the national agenda through monetizing the economy by providing new market access. So for me, it presents an opportunity to expand our manufacturing base as a way of stimulating that particular growth. So identifying a big market such as South Africa. South Africa is, I think, one of the top 5 economies on the continent. So by harnessing this trading relationship between ourselves and South Africa, it creates a solid platform for us to be able to expand our manufacturing and export base. So when you look at the manufacturing sector, it's quite diverse. I mean, we have various industries within the economy. Pharmaceutical is one example where we've played a very pivotal role. In the agri sector, we have played quite a pivotal role as well in providing trade and working capital solutions. So diverse across the industries. We have clients that are into plastic manufacturing, paper manufacturing. So in the various industries, based on the opportunities that we've cited, we have been very active partners in terms of providing capex and working capital solutions. So in the various sectors, and based on those examples that I've given you, around pharmaceuticals, around plastics, around packaging, distribution, and steel, most importantly. So we have some clients that are into steel manufacturing that we have supported to a large scale stuff. So I think for me, the summit presents an opportunity. First of all, when you look at the economy of South Africa, the size and its positioning on the continent, this is an economy that's in excess of $400 billion versus our $50 billion economy. So what does success look like for me? I think success means a cross-pollination or synergies that we can achieve between the two countries. Understanding what strengths we have as a country. I think we're endowed with great natural resources that result in a very robust and vibrant agriculture sector. We see some of the key exports such as coffee, tea, pharmaceuticals being some of the key exports that we send to South Africa. And equally, we import a lot of equipment and machinery from South Africa. So for me, success means scaling up on both sides, us more than doubling our exports in terms of what we're able to send through to South Africa. And also just having industries, say from South Africa, setting up base in Uganda, because for me, that is a direct benefit that one would expect to see. And one of the aspects of the summit is that we are bringing in place, or into the summit, I think out of the 250 delegates that we expect to attend the summit, in excess of 50 should be clients of South African origin. So for me, success will be converting some of those clients that are coming from South Africa, actually setting up manufacturing entities or other industries within the Ugandan economy. So that's what success looks like for me, and ultimately reducing the trade imbalance between the two countries.
We'll now take a very short commercial break. Money and Markets continues after this break.